Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, June 27th, 2024. So we did have a little bit of a wild day today. I had mentioned that, I think volatility is going to start picking up. And tomorrow, we have the PCI numbers or PI, I forget whatever ones it is, but it's something that the Fed really monitors. And I mean, if it comes in hot, then this market's going to sell off. If it comes in better than expected, then we're going to shoot higher. So the pattern that I had, I mean, we got in actually we had 3 trades today. So when we came up to this level here. This is around 1 p.m. When we popped up here, we had this little buy program, then down and then up again. We had bearish divergences in place. You can see the RSI was in extremes and having a bearish divergence. So from here, we wrote the 5500 call and bought the 5505. And we got $1.60 premium for it, and you can see that there was no sweat at all. Now we couldn't do the iron condors because we would have been stopped out. So there was no sense of even trying to get them because these moves are just too big. So I just took the credit spread on the call side here. And like I said, we actually got in twice on it because I had it in. We were up pretty good, and I put my stop at entry. But you can see once it touched up here, we went straight down. And the crazy thing is that the way that this worked on it, where our price, we got filled at $1.60 here. So I put my stop at $1.60 because we were up I was up like $400. And you can see it touched that stop, but then the next trade was $1.05. So we actually made, with 10 contracts, $550. But I immediately got back into it again, and $1, and you can see that they expired worthless. So that's $1,000. So this one was good. And then we had a couple other ones. Hang on one second. Okay, so here you can see, because like I said, tomorrow I do believe that we're going to have a pretty volatile day, and it's going to happen before the market opens. And so we put on a straddle, buying the 54.70 puts, buying the 54.80 calls. So it was an expensive trade. We had 23, for 10 contracts, 23,700. So that it's one of those things that what we're looking for now is the price to move up or down more than 23 points from either the 54.70 or the 54.80. And we put on another one that was the 54.90, 54.70. And that one is, again, it's a cheaper, but it's one that I do believe that we're going to get a pretty big move tomorrow. And, this pattern right here, actually, I'm going to show you something. So this is what I sent out in our trading room when we were down here, because we were I was pretty net short here. And I told them, I said, listen, I'm either just close out the credit spread. I don't believe we're coming up there, but we're able to get out for a nickel, so we didn't have to we didn't have to do anything. And plus, we also that's where we took the straddle as well, and we were able to close that for close to, I think for 10 contracts, it was like 2,400. So it was overall a really good day. But again, when we are here, this is when it was said to close them, because this is the pattern that I was looking at, and it's a descending triangle. So I said, this is, if they're going to bounce it, they're going to bounce it right here, and we're going to come up, and then we shoot down. So let's take a look, and if you look at the thing, that's exactly where we went to. So these late 5-minute buy programs, I'm not really quite sure what they are or why they're happening, but we've seen it, I think, going on 3 days in a row, where the last 5 minutes they're just bombarding the ask and driving price up. But again, this is the pattern. Now, with this pattern, again, we'll know pretty early if it's going to play out, because if they gap up, then this pattern is no longer in play, and we're hoping for our calls to go. And really, what I'd be looking for is if we break above this, that we're going to take out this 54.92 level and head up to the 5500, 5505. But I'm really thinking that we're heading up to the 5520. So that's if we head higher tomorrow on it. Now, if the pattern plays out, and let's say the PCI numbers come out and they're not good, this particular pattern is looking for a move to come. So we just take from the top to the bottom here, and let me just take this off here. So the pattern it would be this much. Let me hang on a second. Okay. So, whoops, bear with me 1 second. I'm messing everything up. Okay. So the pattern is looking for a move to come down towards hang on, okay. So it looks like it's coming for a move coming somewhere down to the 54.43 level. Now, why is that important? Well, first of all, if we do that, it's going to be if we do get down there, it's going to be something like 35 points that we're going to be making, and the straddle that we made is good. If we head up and we go up to the 55.20 or say even higher than that, then we're going to make money on the call side. But the reason why this is important is if we go back, you remember, this is that support. So this pattern that I'm showing you with the descending triangle actually has a downside target right here. So this range right here is still in play. Either it's going to give way tomorrow and we head higher, and like I said, we see the S&P trading up as high as, it wouldn't surprise me to see us as high as 55.20, 55.40, or something higher if those numbers are really good. But if they're bad, then we're coming down and testing this range again, and we got to see what happens. If the bulls decide to defend this, then the next target's going to be back up to this range. Now, if this fails, then we get the quick move that will bring us down to the 5400 level. So I'm kind of open-minded now. I mean, I have more reasons to be looking lower rather than higher right now. There's some serious indicators and divergences that are in play. And I think it would be healthier for the market to come down and test this wave 4 here and come down to the 5200, maybe even the 5100, and give it a little time to breathe, because we have these sell signals on the hourly chart, we have sell signals on the daily chart, and we have sell signals on the weekly chart. So that, on top of with the VIX being at near 5-year lows, I just think this is a very, very dangerous market. And, I'm open-minded if it goes up. I'm not saying it has to, but the pattern that I'm looking at right now, if this holds, is looking for the move to come down to the 54.40, and that's going to be another test there, and we'll see. If the bulls defend it, then good. If not, then we're going down to the 5400, 5300. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.